Good morning, and welcome to the BioSyent Inc. Q4 and full year 2014 results presentation. My name is Rene Gorham, and I'm the Chairman and CEO of BioSyent. Just want to start the presentation with our disclaimer. Most importantly, this presentation does include forward-looking statements, and BioSyent does not undertake any obligation to update or revise the presentation if actual results differ from those presented in this presentation. So let me start with quarter results. On the revenue side, sales for the quarter ended December 31st. 2014 was $3,058,000, just a little over. This represented a 43% increase from $2.14 million in 2013, and you can see the progression on slide 4 from 2011. So over the last 3 years, the business has grown at a compound annual growth rate of 63% in the fourth quarter. For the full year, the 12 months ending December 31st, sales were $12.2 million in 2014. This represented a 57% increase from last year's $7.8 million. And once again represented an identical 63% compound annual growth rate over the last 3 years. So our growth drivers in the fourth quarter, FeraMAX 150 was strong in Canada. Unit sales were up 26% from the fourth quarter of 2013. FeraMAX powder looks like it has gained traction in the market. Unit sales were up 33% versus Q4 in 2013, and finally, the last driver would have been Cathogel. Units were up 79% versus Q4 of 2013. Incidentally, Cathogel is now used in over 160 hospitals in Canada. Those relationships give us a good base of business for other hospital-based products, and we'll talk about that a little bit later in the presentation. The number of hospitals using Cathogel is set to grow again in Q1 and Q2 of 2015, as we have just secured in late last year and early this year new supply contracts, and I'll speak to that in a couple of minutes. So during the quarter, the fourth quarter, activities included the launch of Proctus M. That was in November. We secured a new Cathogel hospital supply contract, which gave us access to about 40 new hospitals and clinics. 17 of these hospitals and clinics have already or had already commenced ordering in the fourth quarter of 2014. And finally, on the international side, we've executed a term sheet, or we did execute a term sheet for a 6th international FeraMAX market. We normally don't speak about term sheets in our presentations or public disclosure, but subsequent to the execution of that term sheet, we received the customary payment in advance. It's a deposit payment that we received that is non-refundable, and so we assume that at this stage that is a firm engagement, and the process for getting the product approved in that new market has commenced. On page 8, I'm reviewing subsequent events. So subsequent to the quarter end, quite a lot going on in the first 6 weeks of the year. So we launched the Agaton system prefilled syringe containing atropine, and in fact we've secured our first supply contract for that product. So that gives us access to up to 78 hospitals, clinics, and long-term care facilities. So that was a good start on that product. We also organized our Canadian business into 2 units. That would be the Canadian pharmaceutical business. So we now have established a hospital business unit with a separate P&L from the community business unit. And we've done this for the purposes of maintaining and improving our sales and marketing focus. So as we've added new products over the last year or so, the number of products that we were managing in each of the, or in the business team had grown to the extent that we wanted to make sure that we could maintain focus, and we knew we were bringing on new hospital products. So we've made that change now effective in January, and we've hired new senior leadership to run the new unit as well. Right now we're recruiting for 5 new hires on our 2 sales teams. That process is well underway, and we expect the sales team to have grown by 5 by the end of the first quarter of this year. We've also recently received orders from 2 new international markets for FeraMAX 150 and FeraMAX powder. Those would represent our first orders for FeraMAX powder in international markets. This brings us now to a total of 6 markets where we have agreements, and the 4th of those 6 has now obtained marketing authorization. So by the end of the second quarter, we expect FeraMAX to be actively promoted in 4 international markets. So I'm going to flip to a chart that we've used to track our pharmaceutical sales by quarter going back to 2009. So we're now well into a kind of a 5-year view, as the chart starts with the third quarter of 2009. So you'll see the sales growth tipped back a little bit in the fourth quarter, and just like to take a couple of moments to explain what's happening here. So on a quarter-over-quarter basis, Q4 14 versus Q4 13, pharma sales were up 43%. But with the introduction of FeraMAX sales in international markets, what has typically been a pretty smooth growth curve in supplying the Canadian domestic market has now turned into a slightly lumpier business. So in Canada, we supply many, up to 40 different wholesaler locations, and they in turn supply hundreds of hospitals and thousands of pharmacies. And so as we've introduced products and grown our business, we've seen steady quarter-over-quarter growth. We saw that stop in the fourth quarter because the third quarter of 2014 had a large international order, and the fourth quarter didn't have any international sales. So on the domestic side, Q4 over Q3 did grow by 10%, but taken in total pharmaceutical sales, that was just about flat with the third quarter. So our revenue mix by business. This is a slide that you've seen evolve since 2010 with a 60-40 revenue mix in favor of insecticides all the way to 2014 now. We've introduced actually to look at our business in addition to pharmaceuticals and legacy business, we've also introduced a look at the international pharma business. So you can see the decline in the importance of our biofriendly insecticides business. That was down to 7% of overall sales for 2014. We expect that business to represent an even smaller amount of our overall sales in 2015, and that's not because the business is getting smaller. It's just that our pharma business is growing at such a clip that the importance of insecticides continues to decline, and this is entirely consistent with our strategy to grow our specialty pharmaceutical business. So in 2014, pharmaceutical represented 93% of sales. Overall, 4% of sales were in the international segment, and we expect that to in turn be increasing, not just on a static base, but also on an overall basis. So international sales, we see probably a close to tripling of that business in absolute dollar terms this year, and would see it growing nicely during the course of 2015. So on slide 11, we have a look at our earnings before interest, tax, depreciation, and amortization. That's EBITDA. Just a comment on that. Up till now, we've used typical IFRS terminology to present our business, but in meetings with investors over the last year or so, a lot of questions have been asked about EBITDA, and although it is not a standard IFRS accounting term, we've decided to demonstrate the growth and development of our business in terms of EBITDA as opposed to net income before tax. So you'll see this evolution in disclosure from the company and going forward on an ongoing basis. So looking at EBITDA on a Q4 basis, quarter ended December 31st, you see 2014 EBITDA of $1,057,000, just under $1,057,000. This represented a 72% increase from Q4 of 2013, and you can see the steady progression over the last 4 years. On a full year basis, EBITDA reached $4.3 million in 2014, and this represented a 73% increase compared to $2.49 million in 2013. So net income after tax, starting on slide 13, once again, we'll look first at the quarter. So in the quarter ended 2014, $753,000 and change in net income. That was a 36% increase versus Q4 of 2013. There's a little bit of tax effect in that growth to be considered versus the 2013 year. And when you look at Q4 2012, you'll see as well the same effect. So there was some changes in tax provision over the course of those 2 years. So that distorts the number somewhat, but nevertheless, a 36% increase in net income after tax for Q4 of 2014. Looking all the way back to the fourth quarter of 11, there was no tax expense, and I'll get into it a little bit more on the next slide when we talk full year. So the full year net income after tax for 2014 was $3.154 million. That was a 64% increase versus $1.928 million in 2013. This represented 22 cents per share, fully diluted, and that compared to 13 cents a share in 2013. And just a couple of comments on tax. So up until the fourth quarter of 2012, the company had tax loss carry forwards and was not expensing tax. The company started expensing tax in the fourth quarter of 2012. And so when we are comparing full year net income, really 2013 and 2014 are fully apples to apples comparable. 2012 to 13 is not. So going forward, we're paying tax, and our tax rate is roughly 26.5%, and you'll see that bear out in the results. So quick look at our balance sheet. Our cash position, or our near cash position, that is cash equivalents, and short-term investments, you can see has grown steadily. As at December 31st, 2014, we had essentially $8 million in cash. That was up significantly from $4.4 million on December 31st of 2013. Likewise, our total equity has grown, and just wanted to point out as well that we have no long-term or short-term debt. Although we have an operating line of credit available from the Royal Bank of Canada, we have as yet not used a nickel of that facility. So just wanted to talk a little bit about operating expenses and how we're managing that. On slide 16, you'll see that our expense spend, both on selling and marketing, general and admin, and all expenses taken together, lag our overall growth in sales. So our sales revenue increase of 57%, and the selling and marketing expenses are growing less than that at 54%, and G&A at 28%. So we've got a very disciplined focus on growing a profitable business and making sure that we're doing the right things and investing in growing our brands, and that any other expenses would definitely lag our sales growth. So looking at slide 17 on an earnings per share basis, you'll see kind of a quarter by quarter breakdown on a diluted basis. You see the change over the 4 quarters. In the most recent quarter, we earned 5 cents fully diluted. This was 25% increase versus the same quarter a year ago. But you can see that our quarterly results on a diluted EPS basis was better than year ago in every quarter of the year, and for the full year, 22 cents EPS was 69% better than 2013's 13 cents. So the last slide in detail in this morning's presentation is our product life cycle. Just a couple things I wanted to point out to you on this one. If you look at the top in the green bar, those are the various stages of a product life cycle at BioSyent, from in-licensing all the way through maturity. And you'll see from this graphic that we have no products that we consider to be mature. A product in our definition is a growth product if it's going to grow 20% or more in a given year. We have 2 products that fall into that classification. That would be Ferromax and Cathogel Jelly 2%. And I should add that is greater than 20% growth. We're not saying that that's the amount they will grow, but if they grow greater than 20, we consider them a growth product. We have 4 launch phase products. That is products that are in the first 8 quarters after they've been launched. And so we just launched the Aguetin Atropine prefilled syringe in February. And last November we launched Proctus. Repagyne was launched mid-year last year, and Ferromax Powder in the middle of 2013. So we have 4 products that are launch phase and still have launch phase and growth phase to go through. So we think we have a lot of runway left on that collection of 6 brands that are currently in the market. And we have 2 products that are in the approval stage, either at Health Canada or about to be filed. So they will not see market likely until 2016. But we have our hands full with growing existing brands in the Canadian market, and also growing with our 6 new partners in international markets on Ferromax. So I wanted to take this opportunity to thank you for your interest in our company. We really enjoy updating you on our business and reporting on our progress. If you want more information, the list of websites has been growing. We have a corporate website at bioscience.com. You can also get disclosure information at cedar.com, as where Canadian companies report. Up-to-date stock quote information at TMX Money, and then product websites, ferromax.com, cathogel.ca, repagyne.ca, proctusm.ca, and for the Aguetin system, website is bioscientpfssystem.ca. Once again, thank you very much.